The big money is not in the buying and selling, but in the waiting. Time is a powerful factor in the growth of investments. As investments begin to yield returns, those returns can be reinvested, potentially leading to exponential growth over time. This concept isn't just mathematical, it requires the discipline of patience. As the saying goes, good things come to those who wait, and in investing, waiting can be quite profitable. But what should we be looking for when it comes to choosing the best dividend stocks? I think the best dividend stocks aren't simply the highest yielding dividend stocks. Instead, look beyond a stock's yield and choose stocks with durable dividends. That is why today I present to you the Charlie Munger Heritage of 6 dividend stocks you can buy and hold forever, which you and John can use to become millionaires with $10,000. In the end, we'll show you stocks that'll not only make John a multi-millionaire, but also pay over $15,000 in dividends every month. Before we show you Charlie Munger's 6 buy and hold forever investments, let's talk about the man himself, Charlie Munger. Munger lived in Pasadena, California for a long time and is most famous for being the business partner of Warren Buffett at Berkshire Hathaway, which they jointly grew into an $800 billion company. When Charlie and Warren were in charge, Berkshire Hathaway made a lot of money for its investors. In fact, it turned every dollar invested into $20,000. They did this by investing the company's money wisely in successful businesses and without taking big risks by borrowing too much. Charlie was a very independent intellectual who, in the words of his partner Buffett, marches to the beat of his own music. And it's music like virtually no one else is listening to. Now let's hear what his music has said about the 6 dividend stocks to buy and hold forever, arranged from modest to highest portfolio value growth in the long term. Starting off at number 6, we have Jefferies Financial Group. Known by the ticker symbol JEF, this stock has a current dividend yield of 2.97%, backed by a strong 10-year dividend growth of 11.93% and an annual average stock price increase of 4.84%. The best thing about this stock is that Berkshire Hathaway, the investing conglomerate run by billionaire Warren Buffett, managing partner of Charlie Munger, bought 434,000 shares last year. Before showing how much John can earn from this stock, first, some of you in the comments have asked why we use these dividend and capital gain numbers. Well, here's why. When it comes to long-term investing, you can't just rely on one number like the dividend yield. Imagine you own a stock for 10 or 20 years. The dividend yield can change over time. To figure out how it might change, you can look at a stock's history and see how it's increased its dividend on average each year. Then there's capital appreciation, which is how much the stock's price might go up. You can also predict this by looking at how the stock's price has changed on average over the years, using a simple formula. Now that you know why, let's see John's return on his $10,000 investment in JEF. After 1 year, his investment will be valued at $10,781. The same portfolio after 10 years will double in value to $23,583. After 20 years, it'll reach $80,079 and pay him $7,550 every year in dividends. By the time he holds it for 30 years, his initial $10,000 will become $539,429, and he will earn $92,332 in annual dividends, or $7,694 per month. This stock will add $529,429 to his portfolio in 30 years, with $125,124 from capital appreciation and $404,306 from dividend income. Jefferies Financial Group is an investment bank and asset management firm that specializes in providing a full range of financial services to institutional and private clients. Its core business focuses on serving clients in the global capital markets. Though it isn't a household name like Goldman Sachs or JP Morgan, the firm has played a significant role in some of the most high-profile financial transactions of recent years. With revenues of $5.9 billion in the last year, this business is the 8th largest investment bank in the world. What makes this stock special is that it's been paying out quarterly dividends to its shareholders since December 31st, 1992. Another stock dividend to hold is Kroger, with the ticker symbol KR. This isn't just one of America's oldest grocery store operations, but it's one of Charlie Munger's favorite stocks. He's owned 1.6 million shares of the company through his personal portfolio. It's also a dividend growth stock with a strong double-digit growth over the past decade of 13.59%, a dividend yield of 2.54%, and an annual return of 8.76%. Based on these numbers, if John invests $10,000 in this stock after 1 year, his investment will grow to $11,130. In 10 years, it'll triple to $30,861. The same portfolio after 20 years will be valued at $112,793, paying an annual dividend of $6,105. After holding it for 30 years, his $10,000, thanks to massive growth factors, will grow to $537,394, paying $45,147 in annual dividends, or $3,762 per month. This stock will add $527,394 to his portfolio in 30 years, with $280,084 from value increase and $247,309 from dividend earnings. Kroger is a well-established and profitable company that offers quality, value, convenience, and choice for its customers. It has a history of increasing its dividends and generating high returns for its shareholders. Kroger is also pursuing a merger with Albertsons, another leading grocery chain, to create a national footprint and enhance its omni-channel capabilities. The merger is expected to close in mid-2024, subject to regulatory approval and other conditions. Next up at number 4, we have U.S. Bancorp, with the ticker symbol USB. So USB was one of the largest positions held by Munger and has over $660 billion in assets. U.S. Bancorp, parent company of the U.S. Bank National Association, is the 5th largest bank in the U.S., and it has the numbers to show it. Its dividend yield is 4.53%, annual returns of 0.86%, and compounded growth of 8.11%. From these numbers, one thing is clear: this is more of a dividend stock than a capital appreciation stock. Running the numbers, let's see if John can benefit from a bank with his $10,000 invested in the Bancorp stocks. After 1 year, his investment will be valued at $10,539. In 10 years, the same investment will grow to $20,016. Give it 10 more years, and in 20 years, it'll grow to $71,539, paying him $10,384 in dividends every year. After 30 years, the same portfolio is projected to reach a valuation of $746,810, and he will receive $190,279 in dividends annually, or $15,857 per month. This stock will grow his portfolio by $736,810 in 30 years, with $23,677 from value growth and $713,134 from dividend income. The only banks larger than U.S. Bancorp are JP Morgan Chase, Bank of America, Citigroup, and Wells Fargo. Bancorp was Munger's 4th largest position, one he opened in 2013 and refused to sell since. It was in contradiction with Buffett, who loved Peter Lynch's quote, "Selling your winners and holding your losers is like cutting the flowers and watering the weeds." But Munger was a conviction-based investor and thought USB remained a quality stock, and USB still proves that it is, as proven by John's investment. The next one on our list is a passive income investor's dream because it has the potential to make you a millionaire. Visa, with the ticker symbol V. Praised by Munger as a wonderful business with huge moats and very little capital required in his early days, Munger believed that Visa had a strong competitive advantage in the payment processing industry and a long runway for growth. Visa returns a huge percentage of its free cash flow to shareholders, but it primarily does so through share repurchases. That's why it has annual capital returns of 16.76%, with a dividend yield of 0.8% and compounded growth of 18.33%. So, like with the others, John has $10,000 to invest in Visa, and he wonders how much he can earn from it. He looks at the projections and sees that his money will grow to $11,756 after 1 year. In 10 years, the same portfolio will be valued at $50,673. Fast forward to 20 years, and his investment will grow to $259,949. That's impressive, but it gets even better. 30 years from now, John's initial investment, with reinvested dividends, will be valued at $1,352,819, paying him an annual dividend of $14,407 or $1,201 per month. In total, this stock will add $1,342,819 to John's portfolio, with $1,255,908 coming from capital appreciation and $86,911 from reinvested dividends. Visa is a leader in its space, providing a payment processing platform that allows credit card transactions to run smoothly. It makes money on fees every time a customer uses a card with its logo, and millions of those transactions take place every single minute. And as long as people keep spending money, especially as they increasingly switch away from cash and checks, this stock will have plenty of room to increase its revenues and profits. Last year, it generated $17.9 billion in free cash flow. It distributed just $3.2 billion of that to shareholders via dividends and used $11.6 billion to buy back shares. The board authorized a $12 billion stock repurchase program at the start of the year while committing to a 45-cent per share quarterly dividend. In other words, Visa has a lot of room to keep increasing its dividend. However, investors should expect continued free cash flow growth as more and more payments shift from cash to electronic methods, where Visa holds a dominant position and benefits from scale. Next up at number 2, we have Home Depot with the ticker symbol HD. Home Depot is the world's largest home improvement retailer, offering a wide range of products and services for homeowners, contractors, and professionals. Munger believed that Home Depot had a strong competitive advantage in the home improvement industry and a long runway for growth. And when looking for a stock to buy and hold forever, the essential characteristic to look out for is a competitive advantage, a fundamental reason a business is capable of beating back its rivals. And Home Depot is one dividend stock that fits in. The type of products the company sells makes it difficult for outsiders to take a meaningful market share. This has helped Home Depot to grow revenue at a compound annual rate of 7.7% in the last decade. More importantly, operating income jumped from $9.2 billion to $24 billion between 2014 and 2023. Home Depot's strong business performance has helped support big payouts with a dividend yield of 2.41%, annual return of 15.55%, and dividend growth of 18.28%. And profitability is vital for dividend stock investors. Dividends can only be sustained in the long run through profits. Home Depot has increased its annual dividend per share from $1.56 to $7.60 from 2014 to 2023. That means if you bought Home Depot stock in 2014, your dividend per share would have increased roughly 5-fold. So, how much can John earn from this stock? Based on all metrics, if John invests $10,000 in this stock after 1 year, his portfolio will be valued at $11,796. The same portfolio after 10 years will be valued at $53,587, more than 5 times the original value. Give it 10 more years, and in 20 years, it'll be valued at $308,298, paying an annual dividend of $10,366. It gets even better from here. If John decides to hold on to his investment for 30 years, he would become a millionaire, as his investment would now be worth $1,945,112 and pay him $84,736 in annual dividends, or $7,061 each month. In total, this stock will add $1,935,112 to John's portfolio and check both boxes, dividend and growth. If you think these numbers are good, just wait until the last stock that will not only make you a multi-millionaire but also pay over $15,000 in dividends every month. So here we go. Topping our list at number 1, we have Lowe's Companies with ticker symbol LOW. Lowe's was one of the personal favorites of Charlie Munger because it's also a major player in the home improvement world with a knack for turning home projects into profits. It has a current dividend yield of 1.98%, backed by a very strong 10-year dividend growth of 20.25% and an average annual share price appreciation of 16.35%. But before showing how much John can earn from this stock, let's see why this stock has made it to the top of the list. With a huge network of stores, this business makes money by selling everything from screwdrivers to kitchen sinks, catering to DIY enthusiasts and professional contractors alike. But it's not just about hardware sales. This company is also a serious contender as a savvy investment. Since 1963, this stock has maintained a consistent dividend payout record, with dividends currently distributed every quarter. The company has increased its dividend each year since 1963, earning it the title of a Dividend King. Rival Home Depot is also a longtime dividend payer, but its string of annual dividend increases only dates back to 2009. In a sign that Lowe's has plenty of excess cash to support ongoing dividend hikes, the company recently announced plans to spend up to $5 billion on share repurchases, which means its stock price is likely to go up. Speaking of going up, let's see how much John's investment goes up with this stock. Based on this stock's metrics, John has scored a winner. His $10,000 in this stock after 1 year will be valued at $11,833. Over 10 years, his initial investment is projected to grow to a value of $55,602. As time unfolds, the growth is even more remarkable. After 20 years, the investment is estimated to be $339,099, paying an annual dividend yield of $11,532. He's thrilled, but he still doesn't sell his stocks. He waits for another 10 years, and in 30 years, his investment is expected to balloon to $2,364,561, paying an annual dividend of $116,050, or monthly dividends of $9,671. This stock will boost his portfolio by $2,354,561 in 30 years, with $1,795,058 from value growth and $559,503 from dividend income. Now, if you want to be diversified and invest in dividend ETFs that can make you a millionaire, for that, watch our video on 6 buy and hold forever dividend ETFs.